What's up everyone, welcome to a coin analysis. In this video we're going to be talking about TRB and how there is a huge opportunity on TRB that you could potentially get into, both long and both short. Now TRB has been one of the biggest coins that everybody has been talking about just because of the fact that it pumped around 400% over the last 21 days. So if you're wondering if TRB is going to continue going up, if it's going up, then where is it going to? Or is it going to start dumping? And if it starts dumping, where is it dumping to? Well, that is going to be answered all in this video alongside exact specific entries and exits. So without any further ado, let's dive right into it. So TRB, it has literally been the hottest coin over the past, give or take the past month. And for good reason. It has pumped pretty much 400% in a matter of less than a month, like 3 weeks to be exact. And the question now in everyone's head is this going to continue pumping or, is it done? And the first step that we must take in order to figure this out is to zoom out on a higher time frame to identify if it has hit any key levels, and most importantly, we want to identify where the liquidity is. Here's the thing you need to understand about the markets. The markets are always simply moving from one point of liquidity to the next. So what do I mean by moving from one point of liquidity to the next? Well, let's come back to this spot here to give you an example. After you form the bottom here, there's liquidity beneath the swing low over there. You come down to sweep it. Right after you sweep it, where do you target? Right? You target the previous swing high there, because there are a lot of people placing their stop losses above this level, and look at how price just barely sweeps that level by just a little bit. Even here, right? Price sweeps the low by just a little bit because there is liquidity lying beneath these lows and above these highs. And the market is simply always reaching for the next level of liquidity. Look at what price does once it hits this level, right? It's a pretty strong reaction around this level. But clearly, this wasn't the ultimate, or rather the final level that price was reaching for. Price was going for this bearish order block over here. And once it fills in the liquidity, once it fills in the imbalance, it goes down a little bit. And then again, it targets what? Previous swing highs, which is right about there. And that's when the moment your buy side liquidity gets taken out, where do you go? You target sell side liquidity. And notice how this entire process here, I don't really talk about, once you hit the bearish order block here, then you go to this bearish order block. Sorry, this is bullish order block. You go to this bearish order block over here. I'm not talking about that. I'm always talking about liquidity. The market is always, at any given point in time, is always reaching for a level of liquidity. Like, I actually filmed a video last week that is still under editing, but teaches you a concept known as the more of like a mechanism that the markets like to move. And it involves being able to use that mechanism to catch tops and bottoms. And in that video, I specifically mentioned that this level was going to be super key for TRB. And I mentioned that we are on the final pump upwards. And this final pump is going to be rather aggressive and it's going to reach for this level because there is liquidity above this level. Now that video is going to be super valuable for all of you watching. So definitely stay tuned for that video. It'll basically just give you another weapon in your arsenal in order to make profits. So basically what I'm trying to get at here is that on TRB, what we need to do now is to find where are the next possible areas of liquidity. And I've already identified a couple. One of them is going to be right around $60. The other one is going to be right around $73. Now, truth be told, I do not think that the level at $73 is very likely to get hit. And the reason for that is because we have pumped pretty much straight up for, 21 days. We've gained about 400% worth of market cap. And if you've been following around the TRB news, there is a lot of whispers in the air that says that this is a controlled pump, where there is some stuff going on behind the scenes that is causing this pump. And because of that, it's not exactly going to be long-lived. And so we have to treat it as such. Like, sure, it might go to $73, but let's face it, in a bear market such as this, and in macroeconomic situations such as this, with the fact that Bitcoin is perhaps on the verge of dumping, let's not take our chances and actually take profit like we're supposed to in uncertain market conditions. 59 is a level that if you break above this high here, then that 59 is going to be the level that you reach for. I doubt you'll go for 73, but you can also keep that in mind. Now, what do I actually believe is going to happen? Well, it has to do with the exact concept that I recorded in the other video. And this has to do with a 3-day cycle, or rather a 4-day cycle. Now, for those of you that are not familiar with this theory, let's just say that usually moves tend to happen in 3 impulses. At the moment, we are on the 3rd impulse. Now, if you look back at previous moves, and I do not make this stuff up, you can feel free to go back into your chart and backtest this. But there are always 3 impulses before a complete reversal that returns back to either 1, 2, or even the original point of, where the move started. And that was actually the level that I was targeting for the TRB short. Sadly, it did not get hit, and right now it's pumping. But again, right now, number one, you are three impulses going up at the moment. Number two is this is a classic, 3-day setup. Monday, Tuesday, Wednesday, where Monday you set the opening range, Tuesday, and then Wednesday, today is going to be like the expansion day. Today is probably going to reach for some buy side liquidity between the $43, $44, maybe $45 level. And then Thursday usually reverses that to recover the Monday low. So just to give you an example of how this looks like, there was a setup on the Euro USD recently that is very reminiscent of this setup. And I remember it because I was trading it. Over here, you have Monday, right? Monday, you set the opening range. Tuesday, this is called the manipulation. Wednesday is the final, expansion day. And then Thursday, because Monday's low has not yet been recovered, Thursday and Friday just comes back all the way to recover the Monday low. Hence why I say the market is always reaching for some kind of liquidity at any given point. Notice how Tuesday you reach for this liquidity over here, and Wednesday you reach for that liquidity over there. So at the moment, TRB does have this kind of similar setup, like a 4 or 5 day setup, and this is super clean. Currently just based completely off of pattern recognition and the fact that, key level has been hit, and there's not really much reason for the market makers to really pump this up even more. Like, sure, there is a chance that it might, pump higher, but all I'm saying is that the odds that, we might have reached the temporary top and we're going for a retracement is higher than if we do continue to pump. Not saying that's entirely unlikely, hence I'm going to give you a bullish scenario later. So at the moment, the level that I'm looking at is this fair value gap over here that hasn't been completely filled. And over here, you have relatively equal highs, which serves as also a point of liquidity. And I expect this level to get hit sometime later today, possibly during the New York morning session, or maybe the New York afternoon session before some kind of consolidation, right? And you get a consolidation, and specifically what you want to look for is a change of character. Now, you can do this on the 1 hourly chart. You can also do this on the 15-minute chart, where basically, notice how the moment the downtrend started. How do we know the downtrend started? Well, we got a confirmed candle body close beneath a recent swing low. So let me paint the picture for you. If we look at market structure in this fashion, right? The market structure basically was following a trend such as this. And then at this point here, that was a key low. The moment that low gets swept, right? You have just formed your first lower low. And then next up, you look for a lower high, and then bam, right? You look for another lower low. This is called a change of character. And this is something that is taught in depth in my free trading course, which, by the way, I have a free trading course that is no fluff, no BS, just pure value. Basically, I teach you everything that I know about the markets, and it's completely for free. And so many people have been getting wild results from something like that. And I think I don't have to say too much about it. Dustin will probably put it the best way.
You're only given so much value, to the point where they will ask, $5,000 for a course, $5,000, and only offer so much information. With the Trading Accelerator, what I got to experience was everything, absolutely everything that was able that would build a foundation to where you can have the leading edge over retail traders. Like all these other gurus that I got to watch their live streams on. It was basically at this point live streams, because again, you're 1 out of 3,000 students doing the Sykes, for example. They would talk about institutional trading, they would talk about market making, but they would never go into how they worked, what makes them tick. This is the first real time to where I was able to kind of step back and almost open the door and see from, I guess, a macro perspective on how the market is manipulated through strings that are being pulled. And it's a cool concept, to being able to actually think like them, dude. That's something else. That's the reason why I consider the Trading Accelerator such a blessing, and the reason why I'm pressing it and taking it so seriously with the better thought process that I have now is because I was taking other programs in the past, but it never worked out because I had the bad mindset.
Anyways, the exact setup is, once you clear the liquidity over here, you might look for some consolidation here, and then what you look for is a swing low to be broken, and then you retrace back into a fair value gap or an order block, and then you start dumping. This is where you put your entry. This is where you put your stop loss. Now, ideally, the stop rate is something like this. So you come up here, and you rate the buy side liquidity, and then like that, right? You clear the buy side liquidity again, then like that, and then something like that. That would be your ideal setup. Setup that is a little bit less ideal would be after you sweep the buy side, you do this, and then something like that, right? This would be less ideal for the very reason that we've discussed before during this entire video, where you have relatively equal highs over here that is just prime for picking. So usually, right, as a rule of thumb, something like this tends to happen, where you clear out the buy side first before breaking market structure and doing something like that. So just be aware of this setup and don't fall prey to it. But you only enter the trade after you get that kind of confirmation, right? Without that, you do not enter because again, there is still likelihood that this thing is still going higher. But if the ideal conditions do present itself and you do catch that short, then hey, it's pretty easy just to ride it all the way back down to the Monday low or even the previous weekly low. So the target for this trade is going to be TP1 at 24.7 and TP2 at 22.6 and possibly a TP3 somewhere around $20, but let's just use 22.8 and $25 ish. And just to put into perspective how this trade could play out for you, at the very least, this is going to be a 10-hour trade and possibly an 11-hour trade. Now, this is a trade that will literally make your week. You take this over the next couple of days. If things go as planned, sometimes it doesn't go as planned. Given the volatility that TRB is experiencing at the moment, I wouldn't be surprised if you were to just do a straight dump over the course of 48, 72 hours. And that's going to be one of the easiest trades. And one thing I do want you to pay attention to in this video is that I'm building narrative here. I'm not just looking at one or two simple, things or simple factors like, oh, there's a bearish fair value gap there or a bearish order block there. It's backed up. So I start off on the daily time frame. I identify the points of liquidity and, okay, maybe this buy side liquidity here has been taken. There's not much reason for the market makers to want to go back up here. Again, there's still a possibility. Over here, buy side has been taken. All right, cool. Maybe now I can start looking at the lower time frame for some possible reversal areas. And then, once I'm on the lower time frame, I see a perfect impulse 3-day setup that is being formed at the moment. I'm like, brilliant, awesome. So that's the second point of confluence. Third point of confluence is again that 3 impulse thing. Fourth point of confluence is okay, there is buy side liquidity within the larger structure here, and there is a fair value gap that hasn't been filled yet. Okay, awesome. So now I have multiple points of confluence, plus the fact that there are some shady things going on in the background with TRB, hence the price has been going up, pretty much straight up. And when you add all of these together, it adds up for a potential. This is not set in stone, but the potential of this trade is an A+ setup. Because for every 1 unit of risk that I put in, I stand to possibly gain about 10 to 11 units of return. And I would take that kind of a trade any day of the week. And yeah, that is the bearish setup for TRB. And now we move on to the bullish setup for TRB. And honestly, there's not much around this. All you want to look for in, this kind of a buy program is when you are in a buy program and when you're reaching for a liquidity level that is higher, in our case, that's going to be $60, then what you want to look for is every time in buy programs, you tend to run out of fuel on the way up. Where do you get fuel from the markets? I want you to think of the market as a car. And in order for this car to go up or down or just anywhere, it needs fuel. Now, fuel from the markets come in the form of liquidity. The market makers need to stop out retail traders or just other traders in general, take their money in order to move the markets in their favor. Meaning sometimes in buy markets, right? In buy programs, you tend to get, sell side liquidity sweeps that make you believe that, the uptrend is going to end, but then in reality, it forms a new high right afterwards because now, for example, you have a swing low over there. Now, generally, when you're taught about market structure, you believe that, a market structure is supposed to be higher highs and higher lows all the way to the target. In reality, it doesn't really work quite simply like that. In reality, you do run out of fuel at some point, and the way you get fuel is when retail traders see the swing low over here, maybe they might go long here and place their stop loss beneath this low. And so there's a lot of people that are placing the stop loss here. You sweep it, right? Again, sweep. The key word here is sweep. It's not like a very strong movement with candle body closes, and then that would indicate a reversal. Hence why it's so important to be patient for this to happen before you dive into a short. So in this case, it's just a sweep. It's just taking liquidity, building up at the petrol station before you take off. This is something that's very common in the market. The same concept applies to when you fill in bullish fair value gaps. For example, over there, once you fill in the bullish fair value gap, immediately you form a new high. So this is a setup that you can take advantage of. Every single, fair value gap or even just sell side liquidity is going to give you an opportunity for the market to form new highs. And this applies all the way. Literally, if the market shows no sign of stopping, slowing down, then just do that all the way until $60. Now, there are some situations where you might miss an entry or you might read the sell side liquidity wrongly. Maybe you might have been looking at that fair value gap over here, but in reality, it was sweeping that sell side liquidity and then it goes up. In that case, don't worry. You hit some, you miss some. The key here is that you just want to take trades where you feel completely, fully confident in. As traders, it's not so much that we aren't able to get good opportunities. Opportunities are endless. Every single day, there are hundreds, thousands of trades, everywhere. Crypto, Forex, you name it. Problem for us, the biggest struggle for us is that we struggle to stay away from bad opportunities. The opportunities that we have not tested before, that we don't really know if it'll work or not. And we just try to get into a trade because, well, we have nothing better to do, right? We're bored. We're action junkies. And that's the thing that really screws us up. If you miss it, that's fine as well. Like, there is always going to be another opportunity to get in on TRB. Now, if I were to give you a proper bullish scenario, I assume it's going to look something like this, right? You take out this, previous buy side liquidity alongside here. You do a little retrace, right? There's going to be some kind of, ideally a swing low, but it could also be a fair value gap. Like, for example, the fair value gap of here, right? You take out the liquidity, you retrace, and then you form very strong, right? Very strong movement. For example, there might be a little swing high over here. Well, you break above that swing high, and then you convincingly retrace back into some order block or whatever, and then you form a new high. That is what you want to look for. Again, you do not just go in on the retracement and just expect it to go up. Sometimes it forms a lower high. Sometimes it can just form a lower high and start dumping. You never know. So if you do want to just go in on the retracement, just be prepared that, it could just be, a lower high formation before going down. So ideally, you be patient. Sure, it's going to take a couple of days for this to confirm. Otherwise, this is a pretty decent setup as well. Not as decent as the short setup, just because of how much confidence that we have, but it's decent enough where you can easily get like 3, 5, 10, possibly 10R. But it's straight targeting, $60. And the lower time frame that you go, for example, if you're executing based off the 15-minute, but targeting a level that is present on 1 hourly time frame, well, obviously your profits are going to be your R ratio is going to be way higher just because you're able to refine the entry. But if you're on the 1 hourly chart, don't expect to get more than say 7R on the long trade, while the short trade, you could potentially get about a return of about 10 Rs for every unit of risk that you put in. But anyways, that is the analysis on TRB. If there is any updates on TRB that happens over the next couple of days, the best place that you're going to be able to get updates is going to be on my Twitter @_theartofcrypto. That's where I'm going to be posting updates on charts that I otherwise don't have time to record videos for. But otherwise, hope you enjoyed this, and I will see you guys in the next market update. Cheers.